context, there are some comments coming in from the AMFI CEO in the conference call where they're saying that about 51 lakh SIP accounts were discontinued in the month of March. Also mentioning the fact that there's a reduction in the equity flows, this on due to the high volatility in the markets, and that sort of a trend is reflective in the AMFI data for the month of March. We also have Suranjana Borthakur who is joining us right now on the show to talk about the AMFI data to help us understand what exactly one should make out of it. Very good morning to you, Suranjana. Thank you so much for joining us in ET Now. And first number that everyone watches out for very closely, no doubt you want to look at the equity inflow, you want to look at the AUM, but it's the SIP inflow number that catches everyone's eyes. And now it is at a 4-month low levels, coming in at around 25,926 crore rupees. Should we actually read too much into it? Because you have the AMFI CEO also talking about the fact that 51 lakh SIP accounts were discontinued in the month of March.
Hi, good afternoon. I think SIP numbers are not significantly, I didn't have a chance to look at it properly. I think what you are saying is 25,926. So it's not a significant drop which has happened into data from last month, because last month also the number was somewhere around the same. But I think that was also because February is a shorter month, which is why there was a drop. But this month, I think the drop would be probably there in terms of some closures also which have happened. Some people who would have probably stopped their SIPs. Our recommendation is always the fact that you need to stay invested long term in your SIPs, and when your market corrections happen, I think it is the best time to buy more, because you are actually accumulating additional units, which is basically a sale in the market, so you're getting to buy at a cheaper cost. But I think if you look at the overall number, what has happened is, I think from a 29,000 crores of inflows in equity last month, this month it has dropped to around 25,000. I see a significant drop in the sectoral funds, which is a good thing, because I think there was a lot of frenzy around the sectoral NFOs which were coming, and there was this, in the last couple of months, we've seen a little bit of drop there. I think last month was somewhere around 5,700, and this month is looking at about 170. So I see a large part of the equity flow, which is reduced, is actually because of the sectoral fund inflows. I think large cap has had a marginal drop in the numbers, and small cap has seen a marginal increase. Other categories are almost similar numbers. I would think in terms of trends in the market, I see that there is definitely a larger buying for the large cap or the flexi cap sort of categories, and rightly so, because of the valuation looking relatively better in those segments. I think from what is concerning to me is a little bit of large drop in the hybrid segment. I think hybrid, where we saw last month somewhere around 6,800 crores of inflows, this month has seen a negative 900 crore inflow. So which is what is, in a volatile market, actually hybrid, especially categories like equity savings, which have seen a large drop, probably, this is a good time to buy hybrid categories, because it helps investors to, not get impacted by tax incidents of, moving between different asset classes. Also because they are great categories to manage the behavior of the clients in the market. So I think that makes hybrids an interesting category to be in. I would think from a long-term point of view, if we see that there is a slight increase in the small cap segment also, I think if investors are taking a long-term view, are investing for a slightly longer horizon, which is at least 5 to 7 years, then these categories are great categories to keep increasing your commitment. And it's just that request would always be that people shouldn't look at the short-term returns of last year and then get enamored by categories like this. So I think if you see the overall flows also, somewhere the overall flows are they're not, the liquid category has seen a huge drop, which is why if you see the debt category has actually seen about a 2 lakh crore negative number, which is why the total flows have got impacted quite largely.
Okay, so Ranjana, thanks for that roundup coming in of the entire AMFI as well as the SIP data. Just one point other than this, I wanted to understand, you've spoken about this, but I just want to get a better picture on the entire small cap fund inflows that we're seeing, correct? Because at a time like this, one would assume that investors would stick to largely safer or blue chip names like your large caps, but in fact, we've seen a slight bit of a decline there and a 10% month-on-month uptick in the small caps. Do you believe that this is only on the back of the valuation correcting and people have bought the dip, or do you believe that this is actually looking appealing and interesting right now, which is why we have seen so much inflow into the small caps? Because it's contradictory to the kind of market moves that we're seeing right now. One would assume that large caps would make for a safer bet right now.
Yeah, you're very rightly pointing out that obviously large cap or flexi cap would make for a better entry point at this point in time. But corrections have happened across the market. I would say the corrections have been more significant in the large cap segment also because of the large FI outflows that we have seen. But there is a relative valuation correction which has happened in the small and mid also, though they still remain slightly above the comfort zone. I think there's been significant corrections that have happened there. Like I'm saying, I think we are hoping that this is not investors coming into a category like small cap getting enamored by last 1.5 years or 2 years returns that people have been able to make. Hopefully, people are looking at the long term, and if they are looking at the long term, I would believe that in Indian markets, opportunities are evolving. Opportunities are, if you have a time horizon of 5 years, 7 years, we believe having enough allocation to the broader part of the market, a broader segment of the market, which is mid cap and small cap, is essential in portfolios to create wealth. If you stay, if you're taking a horizon of 5 years and investing only in the large caps, you may not be able to make enough money. So we believe that it's important to have a representation of all segments, which is where if the investor is taking a long-term view, a good time to look at all three segments, not just large cap, but large, mid, and small. Comparatively, I would say in relative valuation point of view, probably large and small are looking slightly better. Mid is still a little more expensive.
All right, on that note, thank you so much, Suranjana, for joining us on the show to talk about the AMFI data, actually helping us decode and helping us understand how could we actually read this sort of data much better. Thank you so much for always making time for us on ET Now. But as of now,